that we're inside of and the daily traditional long setups that we are inside of have valid support levels, and the VIX ran right into its resistance levels inversely. And one thing to point out about longer term time frames is that you'll remember when we were dipping into these previous highs last week, how we had on the S&P, there was a trading day. It was before the actual futures did it. Dipped into highs and then had a daily close below the previous highs. Then the futures went through, dipped into highs and had a daily close below the previous highs. And then we closed the week last week below the previous highs. That is considered a failed breakout. And it's what gave us a lot of momentum, and along with the VIX's VIXplosion support level, of course, defending, and the three unfilled gaps that were below us to fill. And run us down into this long. And yesterday afternoon, what we were looking at is what would be the setups that would confirm that the bottom of this range was considered support. And the first evidence that we have of that is the series breaking here, breaking through the next measured move in our series. You can see it here where the ES was running right into overnight a resistance level, and then it broke through that 61.8% line. That's the first. Now, there are variations of resistance above us, but we also have the fact that if you go back out to that daily chart again, that we're at the end of the week here. And it is very likely we're in a pro gap up and go right now. We're in a pro gap up and go. And we have an edge towards the half gap fill, but it's a very similar type of situation to what we had yesterday, where we were below the gap fill, pro gap down and go. We squeezed into the half, and then we sold off from there into our sell off into the end of the day, into the overnight time frame. Well, all our targets were hit. Everything, there's nowhere left for the markets to go down, right? And we have exactly the opposite now. We have a pro gap up and go. There is an edge to the half gap fill, but if we close on the daily chart, which is today, above this previous low, and against the end of the week, we close the week above this 68.1450. It's exactly the opposite of what we had at the top of this range last week. And it's really, you have those three kind of confirmations going on to suggest that this is just a pullback, and we've identified it successfully, that this is a pullback that leads us into those 71.56, 75 targets, and then the 71.39.50 targets, and then the 73.30, which we were identifying as the 11.07% rally average, which is the average of the rallies that we have after the Federal Reserve cuts interest rates over the last now 15 beginning of the rate cut type of scenarios. Now, it's interesting what happens after that, and of course that is a whole other subject. But when we're thinking about gap fill statistics here, gap fill stats on Friday are 66 to 78% probability over the last 90 days. Now 83% probability over the last 30 days. So there is quite a nice edge there on a Friday. But when you're outside of the 30 handle, there's only a 32% probability of filling the gap. So we open outside of the 30, or even if we're opening outside of the 20 here, there's an edge to the half gap fill, 83% over 90 days, 83% over the last 180 days, 77%. And where would the half gap fill be at this exact moment here? We're going to simulate it. We don't know what it... This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.